again, in a flat market, it can be very noisy. And if it were as simple as I buy when we're above, I sell when we're below, you would end up, everyone would be rich. So, of course, that does not work. And if you're really trying to trade that intraday, you could whipsaw yourself so much in 1 month that you negate all of the benefit from missing the next 20% drawdown. So I think it's a good signpost to be aware of, but I think it's also important to say, bigger picture, what is the trend? And as I've pointed out, it is now flat, and it looks like if you're looking at monthly S&P, let's say you're looking at a 10-month moving average, you're close to your next tick being decisively downward sloping. And I do think that changes the narrative. And your bigger problem is not the S&P. Again, we're only 6% off the high. Here's your real problem. Semis had a decent day today. Slaughtered since the beginning of April. Still down 18%. Home builders look terrible. Small caps look terrible. Transports look worse than all of those. So if you're saying I derive meaning from individual sectors and I project that into my view of the economy, well, the things that you would say are economically sensitive, from home builders to semis, look the absolute
You've also
worst.
been pointing, though, in the last couple of days to Apple and its weakness as one of the two most important stocks in the market to keep an eye on. That stock is sitting at $177.
Yes, and again, you did not get a new high this spring as you did for the overall S&P. And you also didn't get that in Amazon either. Google does not look great. Facebook is the best looking of the FANGs. That's not saying much. It's had a very bad 6 months. So the biggest stocks, the ones that investors look to, and it gives them confidence to go out and buy other stocks, I guess is the best way to think about those. They're not helping you right now, and they haven't been for a long time.
Well, okay, so Kourtney, just to put it all in perspective, we're coming off of 5 down weeks in the market, and 2 days into this trading week, already down 1.5%. How are you navigating through all of this?
Well, it's kind of interesting. My personal portfolio, I'm just kind of sitting there, and I'm adding to positions that I already have and that I have conviction in. So like the Facebooks, as Josh and Scott both know, I've been a holder of that for a long time, and I love the name. I've been adding strategically to names that I personally can hold for the long term. And candidly, at Loop Capital, we cover institutional investors, many of which are long and hold, but then we also have some hedge fund clients as well. And it's interesting, the dichotomy and how they're responding. We're seeing a tremendous amount of kind of selling on the close today from our larger index and quant clients for some reason, obviously kind of leaning into what's been happening all day today. But then we're also seeing, our fundamental managers not really doing much. If they are, they're adding around the edges in positions that they have a strong fundamental belief in right now.